If 2024 has your head spinning just as much as I am with everything happening with our economy, how expensive everything is, the affordability crisis in housing, and now our very own president stepping down right before the election, wild, wild times. My name is Beny Rabuchin. I am a 20-year veteran in helping homeowners get mortgages, to buy homes, to build wealth the smart way. I am a huge proponent of education and guiding people through these wild markets like we're in right now in a very easy to understand fashion. Today I want to break down your July real estate and mortgage update to keep you in the loop and to help you navigate all the crazy noise that we're hearing within this space. Listen, before I get into these hot topics, if this is helpful for you guys, my mission is to educate. I want to cut through the noise. I want to make things easier to understand. So if you like what I'm doing, I'm curious to hear your feedback, like what I'm doing, and please subscribe as I put out this content often, and I want to get this in front of many people as possible to help them through this journey. All right, so the biggest news that we've had from our previous Federal Reserve meeting is an article that you'll see right here, and this is all over the headlines right now, that the Federal Reserve is going to maybe do their first cut in their September meeting. Now, for the past couple years, the Federal Reserve, ever since the pandemic, has been raising the federal funds rate, which indirectly is causing mortgage rates to also rise. And that's why we saw interest rates rise so dramatically over the last couple years. Now, this year, going into 2024, many of the economists at the beginning of the year felt that the Federal Reserve would start to cut rates earlier this year. We're now through July, and they haven't cut rates yet. But the recent meeting that they had was finally showing some signs that the targets that they were looking at are giving them the indication that based on where we are in our economy right now, that they might start to cut the federal funds rate. Many are believing that it is 100% chance that they're going to do their first cut in September. This is awesome, awesome news, and let me explain to you why. So the federal funds rate is different than mortgage rates, and I want to make that very clear. Now, in the September meeting that's going to happen, September 19th, they're going to potentially do a cut. Usually these cuts are about 0.25%. Now, some believe we could see 0.5% cut. Let's just say it's 0.25% cut. What that means is things like your normal consumer spending debt, so credit cards, auto loans, even home equity lines of credit, those would drop according to whatever they decide to cut the federal funds rate. So if they cut it 0.25%, that means the interest rate on your credit card, for example, will drop 0.25%. Mortgage rates are not tied to the federal funds rate, believe it or not. They're indirectly tied. So if they drop it 0.25%, it does not mean that that day mortgage rates drop 0.25%. Now, the Federal Reserve doesn't meet every single day. So if we had to wait for them every single time to meet, hoping that mortgage rates drop, it doesn't work like that. Mortgage rates are tied to the 10-year Treasury. That moves around every single day, sometimes multiple times a day. This is why mortgage rates change on a more volatile move. So depending on what the 10-year Treasury does, that's what mortgage rates will typically do, and this has just shown in historicals. Now, they are indirectly tied, as I mentioned before. So what the Federal Reserve is looking for are two big things that I've talked about in previous months. They're looking at inflation. They've tried to get inflation down over the last couple years. Their target is 2%, and they are achieving that. It is working, and inflation is coming down, and we think that that's going to continue. Now, the other big thing they've been watching is our jobs market. As I talked about in previous months leading up to this, our job market has been pretty resilient. However, we've seen some really big changes as of late. We're starting to see unemployment rise a little bit. This is what the Fed has been watching for. This means we're having some cracks in the job market. It's difficult to get a job. We're seeing more people claim unemployment. So this is not good for the job market, but believe it or not, bad news like that is good for mortgage rates. So what will happen is as they're seeing that right now, they believe they've seen enough to start cutting the federal funds rate. This is going to make things a little bit cheaper for us. So this is a good thing. And we believe that mortgage rates are going to drop in the same fashion. So again, If they drop 0.25% in the end of September, doesn't mean that mortgage rates will drop 0.25% that day. There's still going to be some ebbs and flows with mortgage rates. However, this is a great sign if they continue to do that. Now, we're expecting that they're going to maybe have 2 cuts this year, one in September and one in one of their final meetings into 2024. This could hopefully be the trend of mortgage rates getting down into a little more palatable amount to allow people that have been waiting on the sidelines who can't afford to buy a house get into the market. So as you can see here, I'm going to go over a couple of the remarks I took from Jerome Powell. He's our chairman of the Federal Reserve. And these are the things that they're looking for that I just talked about, right? They're seeing more good data that would strengthen our confidence that inflation is moving towards their 2% target. Elevated inflation is not the only risk that we face. We've talked about this. It's the job market. The job market has cooled considerably. Now, if the labor market weakens unexpectedly, we could see the rate cut, right? So these are the things that they were talking about in that meeting, which is now turning the markets in, okay, they're ready to make a cut, and this is why they believe it's going to happen in September. Okay, let's go into another 2 topic today. Another hot one is inventory. The challenge we've seen since the pandemic is we have such low inventory, and there's a couple reasons for that. One is, ever since the Great Recession, way back in 2008, builders got reluctant to build because many of them during that time, we had too much inventory. So a lot of builders lost their homes to the bank. They lost a lot of money during that time. So because of that PTSD they have from 2008, ever since 2008 leading up into now, we've been playing catch up. We haven't been building enough homes to satisfy the demand. So that's why this market is way different than 2008, and also why we're not going to see a market crash. There's too many buyers out there and just not enough homes to satisfy that demand. So if you look at this chart that I pulled up right here, this goes back all the way until 1999. But if you look at that orange bar there in 2008, that was the highest level of inventory that we've ever seen, and that's when the crash happened after that. If you look, ever since then, inventory has dropped. In fact, it was at the lowest that we've ever seen in 2021. And you got to remember, in 2021, we saw the lowest mortgage rates that we've ever seen in history. So we had low inventory, and we have so much demand that they were just soaking up all that inventory very quickly. Now, if you look here from 2021, slowly 2022, 2023, and now we're starting to see an increase in inventory. Now, they are building right now. They're not building enough. This is also in relation to, we've also seen mortgage rates rise a lot, right? So it's held a lot of buyers who normally that would be in the market not able to buy. So it's allowing inventory to catch up a little bit. But I want to be very clear, and this is the noise that you're going to see in headlines that makes it perceived to be that we have so much inventory coming to the market. This is not true. It is increasing. This is a good thing. However, with inventory coming up, it's just still not even close to where we need to be to have a normal, healthy market in regards to inventory. I talked about in the previous point before, if interest rates start to come down a little bit, we're going to see a lot more buyers come back into the market, and they're going to start soaking up this inventory again. So yes, it's a good news, it's coming up. However, inventory is still extremely low, and that's just the reality. Okay, let's talk about demand a little bit. People that are in the market to buy a house. So demand has slowed for a couple reasons. As I've talked about, with interest rates so high and mortgages and payments being so expensive, there are a lot of buyers that said, I just can't handle this market. It is too expensive. I'm going to sit back and I'm going to wait for interest rates to drop. So we have seen demand drop in the past couple months. You know, being that I do these monthly, I more look at a more micro level than I do big picture. So from June to July, we are seeing demand slow a little bit, and it could be in relation to a couple different things. Usually it's a seasonality thing when it comes to real estate. Now during the summer months, usually families are traveling and not a lot of people are buying homes, especially as we get later into the summer. So it could be in relation to that. The other reason is interest rates are still high, right? That's going to keep demand a little bit lower. The other big thing that is coming that I alluded to at the beginning of this is we have an election coming up in November, a big one, and we have some big changes. Now with Biden stepping out of the race, there's just a lot of uncertainty what's going on with the market. So I believe that there's just a lot of people that are holding back and waiting for that to happen. So I want to be clear. Markets are not the same everywhere throughout the United States. Let's just put it this way. Every market is not created equal. For example, I'm located in Bend, Oregon. I help families in multiple states, including really all of the Western states. And in helping families in all of these states, I get to see eye for eye exactly what is happening in some of these markets. For example, in your Southern California market, if a home is priced right, almost every single home has multiple offers. Yes, even at these elevated interest rates, we're seeing multiple offers on all these houses, which in turn is driving up the price of those homes. The other market I help a lot of families in is in Bend, Oregon, in Central Oregon. This is a much smaller market. Here, we're seeing homes sit on the market a little bit longer. We're seeing sellers cut prices a little bit to attract some more buyers. The reason for that is home values aren't necessarily coming down. They're just, buyers are reluctant right now. Buyers want homes that look good, homes that don't need a lot of work. So we have extremely picky buyers, which I don't blame them. And then we have sellers that maybe have missed the mark on pricing their house. So there's a little bit of a stalemate right now. So for example, in this smaller market, we're seeing demand has slowed substantially. So depending on the market that you're in, it could vary. The bigger markets, those high cost markets, typically we're seeing homes trade pretty quickly and with multiple offers. Now, if you happen to be in a market like Bend, Oregon, or a smaller market where maybe homes are sitting on the market a little bit more, how I see this is potentially a great opportunity as a buyer. Now, buyers are always looking to get a deal. It's very difficult as a buyer to negotiate a deal or favorable terms or a reduced price or credits or whatever you're going for in a market when you're competing with multiple people on the same home. Versus finding a home that's been on the market a while, maybe you have a seller that's very motivated to sell. At times you can go in there and negotiate great terms. So depending on the market that you're in, you need to look for those opportunities. These do exist right now. I feel that these opportunities are going to be very short-lived as rates drop, and I'll touch on this in my opinion and perspective after this. All right, let's go to our fourth point that is so important for you to understand, and that is home values and what are home values doing right now. I touched on this on the previous one. Depending on the market that you're in, and if you're watching it, especially if you're looking at Redfin and Zillow and all those types of sites, or even your neighbor, you might see their homes are on the market a little bit longer. You might see that maybe they're doing some price cuts to attract more buyers. I want to be very clear. This doesn't mean that the housing market is crashing. It doesn't mean that home values are coming down. It's more of a reason of maybe the home wasn't priced right. And the reason I say that is homes that are priced accurately move very quick in this market. Now, the average days on market for a home that is priced right is about 14 to 20 days. That is really fast. For a home that is not priced right, meaning a seller asking way too much for their home, remember, they're dealing with buyers that are savvy, buyers that want to get a deal. And if it's not priced right, the buyers aren't going for it. And we're seeing those homes not priced right sit on the market for 50, 60, 70 days. So it's not a sign when you see a price cut that home values are going down. It most likely is a result of the home was not priced right. Now look at this graph that I pulled here from Redfin. Now this is current. This shows that we're seeing a 4% increase in home values year over year compared to 2023. So this goes to show you home values are still increasing. This will, again, markets aren't created equally. So if you're in a high price market, we could see 6, 8, 10% appreciation this year. If you're in a market that doesn't see a lot of trading with homes selling and buying, it might be closer to 2%. So on average through the United States, Redfin is reporting a 4% increase in value. So I want to be very clear. If we're have all these buyers waiting on the sideline and home values are continuing to increase, what do you think will happen if interest rates come down? So if all these buyers are waiting on the sideline and they see rates come down to a tolerable amount, right now we're sitting on interest rates at about 7% or the high sixes, we're going to see 6.5%, maybe 6.25%. More buyers are going to come back into the market, which in return is going to cause home values to continue to increase. So if you were waiting for an opportunity for the market to crash, If you're waiting for an opportunity to find a home that was foreclosed on, which means the bank has taken it from that owner because they stopped making their mortgage payments, those foreclosures are at all-time lows right now in the United States. So we don't see a lot of deals happening. The opportunity that I see potentially is right now, depending on your market, is a home that's been on the market for longer than normal. Those might be your opportunities to get a deal. All right, so let me give you my opinion and perspective on all that information that I just gave you. So what we're looking at right now is year over year, we're seeing inventory rise. This is good news, something that we've been waiting for. In regards to demand, we've seen that slow a little bit, and in some markets, drop a little bit. So when I hear inventory coming up, I see buyer demand or buyer hesitancy in this market, which again is a lot related to the interest rates. I see this as potentially a great opportunity for a buyer. We talked about all markets are not created equal. If you're looking for a deal in this market right now, I'm looking for homes that have been on the market a little bit longer than normal. So if you're in a market where homes usually go into contract within 7 to 14 days with a new buyer, and that home's been on the market now for 3 weeks, 4 weeks, 8 weeks, and you're looking for a deal, those are the homes that I'm looking for in this market right now. Again, I believe these opportunities are going to be short-lived. As we see interest rates come down, we're going to see a lot of this inventory start to get soaked up. All in all, we've seen a nice trend. These are all good things that we're looking for right now. The opportunity is there. I hope this helps. And we will update you next month in our August update. And if you're looking for more information and short clips about educational pieces, follow me on all the social platforms as I do a lot of content to help with that.